Hello everyone, this is Manish Chauhan from jagoinvestor.com, and in this video I am going to talk about credit card debt. So we'll be seeing some of the solutions for those who are dealing with credit card debt. A lot of people do not use their credit cards wisely and they end up with a big bill which they can't pay. So they keep on paying minimum due, a very small amount, and they get into debt trap. So for those people, we will see what are some of the options they can take. So we'll see all the 6 options. If one option doesn't work for you, you move to the next option. So we'll start with the pretty basic one. The first option is to pay off the debt by breaking your fixed deposits or some other investments. Now this may look very doesn't look like a solution, but there are a lot of people who have a big credit card bill, and at the same time they also have a fixed deposit or some investments where they have the money but they are not paying their credit card bill. They're just paying the minimum amount or a small, let's say 10 or 20%, and they keep on revolving their credit card bills. So the first option is to break your investments. It can be your money in your saving bank account or any other kind of investments. The reason is that generally you earn 4% in your saving bank account, 8% in your fixed deposits, or maximum 10 to 11% or 12% in some other investments, but you are paying 3.5 or 3% interest every month on your credit card bills, which turns out to be like 40%, 45% on a yearly basis. So it doesn't make sense to earn just 6 or 7% interest and pay 40%. So this is the first option. For those who don't have any money in fixed deposit or any other investments, for them the second option is they can opt for 5 to 6 part payments. Now for example, if you have 1 lakh rupees of credit card bill, you don't have 1 lakh rupees to pay in one shot. So in that case, pay a bigger amount which is like, let's say 15,000 rupees or 20,000 rupees a month. Stretch a bit. In that case, your debt will be completed in 6 to 7 parts. For example, let us see an example. I'll give you an example. For example, you have a credit card bill of 1 lakh rupees, for example. Now the minimum due amount is generally 5%, which turns out to be 5,000 rupees. So when you get the bill of 1 lakh rupees, you will also see a minimum due amount which is required to be paid. So you'll see 5,000 rupees. So most of the people, they just pay minimum amount. Now if you pay just 5,000 rupees every month, it will take around 41 months to pay off your entire credit card debt. Just think about it. It will be around close to 3.5 years. Instead of that, if you stretch a bit and you choose to pay 10,000 rupees every month, okay, which is 2x the amount, in that case you will be completing your debt in just 13 months. So just see the gap. 41 months on one side and 13 months on the second side. So at least pay double of minimum due. Okay, and if you can stretch a bit more, if you can pay 20,000 rupees per month, then you can just complete the debt in 6 months. That's all. So that was the second option. For those of you for whom even this option doesn't work, let's look at third option, which is you can take a loan from your friends and family and pay off the debt. Now it's generally not recommended. Even you would refrain from giving any kind of loan to your friends or family members or distant relative, but I'm sure that every one of us have 1 or 2 close friends to whom we can discuss our issues, and we can talk to them about loan, and you can offer to pay some interest also. Like you can ask your friend that, hey, you can, if you put the money in fixed deposit, you will earn 8%. So I will give you 8% on a yearly basis, and I will pay off your debt in next 6 months or 1 year. I'm sure that you may find someone who can help you. Now this is much better, because paying 8% to a friend or a family member is better than paying 40% or 45% to the credit card company. So this is the third option. The fourth option, if the third option doesn't work, if you're not getting loan from any person, then you can take a personal loan from the bank, from the same bank maybe, and then you can settle your entire credit card debt. Now why this is a good option? Because on the personal loan you will be paying an interest of 14 to 18%, which is much better than paying 40% on your credit card bills. So this is the fourth option. The fifth option is you can convert your credit card loan to EMI. It is just like the fourth option. So you take the personal loan and then you pay the EMI, right? So in this option you can directly convert your entire credit card bill to an EMI option. So for that, generally most of the lenders, they provide this facility. I'm showing you a snapshot of ICICI Bank net banking. So if you go to ICICI Bank net banking, under credit card option you can see an option called as convert to EMI. So you just have to click on that, then choose your credit card number, and then you have to choose the transaction for which you want to convert it to EMI. So it may happen that you may have two, three different transactions. Then you can choose the transaction and you will have to select the tenure, that what is the duration of the EMI. Is it 3 months, 6 months, 12 months or 24 months? It depends on your bank how much tenure they provide, and then you just go ahead, and once you do that, it will be converted into EMIs. Now that is still a much better option. You will pay around 13-14% or maybe 18 or 20% also, but it's much better than paying 40% on your credit card bill. So that's fifth option. And last one is to use the balance transfer facility. For some people this may be a new thing. Now most of the credit card companies, they have a feature called as balance transfer. Now what happens under this is one credit card company takes over the debt of another company. So for example, you have an ICICI credit card, for example, and you have a 1 lakh rupees of credit card bill which you are not able to pay, and you want some temporary solution. In that case, what you can do is you can contact a new credit card company. You can go to, let's say, SBI or HDFC or HSBC or any other company. I'm taking an example of SBI here. So you go to SBI and you opt for the transfer facility, balance transfer facility. In that case, what happens is SBI issues you a new credit card. They pay the entire debt to ICICI and they take over all the debt on their side. So now you owe 1 lakh rupees of credit card bill to SBI, not to ICICI. That chapter is completed. The best thing about this is that the new company, the new credit card bill, they will give you a interest-free duration of close to 2 to 3 months. So you get a lot of time to do something about your debt. So you get interest-free period, and a lot of times, if not interest-free, then you get fixed interest options. So they can say that, okay, you will pay some interest for next 3 to 4 months, but that's very small interest compared to 3.5% and 3% monthly kind of rates. So this is a temporary solution, but a good one. Just that in this case, you should choose a company which doesn't have a very heavy processing charges. Some companies may have a good enough processing charges. In that case, the entire the advantage goes away. So these are some of the options you can choose. I'll just list down some of the very high-level points of how you can use your credit card responsibly. Make sure if you are using your credit card, you pay your total outstanding bill 2 to 3 days before the due date. Don't wait till the end date, because we generally forget about the bill. So pay your entire credit card debt 3 days before the due date. That's what I do personally. Okay, keep a reminder. The second thing is, don't spend much more than you can afford. A lot of people go way beyond what they can afford. So a person earning, let's say, 30,000 or 40,000 rupees, and they buy a phone worth rupees 50,000, or they book a vacation using their credit card, and they think that, okay, I'll somehow manage at the end of the month. I'll see later what I can do about that. And then this is how most of the youngsters, they fall into credit card debt. Once they get into it, it keeps on going on for months and months and then years. and then you try to carry your debit card instead of credit card. So I generally don't use my credit card. I don't swipe it anywhere. I just keep it and use it for online transactions. Generally I keep my debit card with me, so I will always spend what I have in my bank account. Simple. And then fourth option is don't keep very high credit limit. Okay, generally banks will keep on sending you SMSs and emails that you can increase your credit limit, and then most of them will increase it. And then what happens if you increase the credit limit? Obviously you will use much more amount. So generally don't keep a very high credit limit, okay, so that you don't spend. You can obviously keep it if you have control on yourself, but I generally recommend that it should not be more than half of your monthly income. So if you're earning like 40,000 rupees a month, keep the limit to be like 20,000 or 30,000 max. This is how I see it. So that is all. I hope this video helped you. Thanks a lot. Visit us at jagoinvestor.com. Thanks a lot.